Testing, testing. Hello, y'all. Hello, everyone. My name is Troy White. I am a financial advisor and portfolio manager with the firm Hoodoo Financial, spelled HOODOO. Please go visit my website at hoodoofinancial.com. Please like and share. Please like and share this video. Please visit my Facebook page, Hoodoo Financial. My personal page, Troy Dwayne White, Troy D. White. Please go to Instagram and be my friend, or my companion, whatever they call it, right? So hook up with me. Now, what I want to do today is test out my doing the video and the whiteboard at the same time. So I figured this is an excellent topic to cover. I can write some notes and some things that maybe you can take some notes as well. And that topic is hip hop economics. So what do I mean by that? I mean the basic blueprint that a lot of the rap artists are laying out, like Jay-Z, in terms of how we as a community need to take control of the economy and help ourselves, and the same way that Nipsey Hussle mentioned the marathon, and there's a long list of other hip hop artists that are making lots of money and other things other than selling songs. And so I'm going to lay out the ways in which you can do that as well. And all of these artists are telling you to do it. So what I'm coming across as I meet with clients and speak to people who are not even clients is that they have a fear and a misunderstanding and a lack of understanding, a lack of awareness of what to do. You know, people have a lot of enthusiasm and they want to change themselves, change their life, and change the way they do things and improve themselves, but they don't know how to do it. So I'm just going to lay out part of that blueprint, that plan, that marathon, that describing the marathon that you will be on. And so that hip hop, I'm calling it hip hop economics. So we in the hip hop community, African Americans, whatever you want to call it, right? People who grew up on hip hop are the people that are around right now. And so, that's if that's you, that's what I'm talking to. So you understand to that what's pushed is economic progress, getting money, excelling, achieving high things, high standard of quality of life. And so that's often praised and admired, but there has not been given a clear path to achieve that for the common person. And even for these artists are only getting that in some cases because they get blessed by the record label, but once they are in the doghouse from the record label, these things go away. So even them, they need this information. You'd be surprised as much as anyone else, if not more. So there's a basic blueprint to all economics success for a personal economics. And for us as a community, and specifically hip hop economics, revolves around three key initiatives that you must undertake. And we're just gonna start there and laying out the what's and why's and how's. And so some of those in the next 30 minutes or in the next 26 minutes left. So I'm gonna start right here. So topic number one is you must have a stock market portfolio. And I'll just speak on those things as we go. So you need to know, oh, you can barely see that. Well, that word is stock market portfolio. So, it's impossible to be a millionaire without having stocks and bonds, your money in some form of stock market asset. And even if you try hard not to, when your money goes to the bank, your bank doesn't have it sitting there as cash. They'll have it written on the books for you as cash, so you'll get the minimal, interest amount, but they're taking your cash and doing something better with it. So nobody wants it to be in cash except for you. So you need a stock market portfolio to on an ongoing basis as a regular thing. This is a regular part of your normal life, is building a stock market portfolio. And what you also need is a, so this is number two, you need a real estate investment, real estate investment portfolio as well. So, as you notice, I did not stop at the word real estate investment portfolio. So we don't do these things once. We find a method that works and we keep it going. And so get it away from your mind that I'm saying you are a real estate investor. No, keep be what you want to be. Real estate investing can be a natural part of your normal life. And that's what I'm saying. And there's multiple ways that it can be. You don't have to get your hands dirty. And, there are various levels of risk that you could undertake or forego and be involved with real estate. Excuse me. And the third level of hip hop economics is entrepreneurship. And that part runs deep through through everything. Entrepreneur, that's an entrepreneurship. So the whole mission itself involves entrepreneurship. So understand that even when you go to a job, you should consider yourself an entrepreneur. You are selling them your services at that institution. And you should have goals that go beyond that place. Your goals go beyond getting another job with a higher salary. That may always be a stepping stone to your to other things that you do, but it doesn't have to be. So understand that. Let me just say a few things about each one of those. So for far as the stock market, you need to invest in customized portfolios when you're in the stock market. And the reason is because every individual has different goals in their life, and every goal that you have will have a different required, different required time horizon for that investment. And each time horizon is going to have a different account type and investment that goes in it associated for that risk and time horizon. So they're all going to have different risks, different time horizons, so different risk reward trade-off associated with it. So just because you heard a hot tip, that doesn't mean that is something that you should be investing in. That tip doesn't necessarily fit your investment criteria, doesn't fit your investment portfolio, unless they're saying this thing is going to go from 0 to 100 tomorrow. It doesn't matter. But if it's some astronomical thing, and then of course you should be skeptical, right? But my point is that all investing is personal. There is nothing that you heard someone else do that should necessarily make you think you should have done it. And even if you should be in that investment, you need to determine to what level of my assets should be in that investment, and what part of my pre-designed portfolio does that asset fit into the mix. What kind of asset is this? Is this thing? Is this an energy sector gamble? And so if so, hey, my energy sector, I'm cool. I got everything I need for my energy sector. So now you're overweighted. So at some point, you're going to have to rebalance your assets to stay with the right risk tolerance to match your investment time horizon, your investment goals. So as you see, as we get deeper and deeper, you want to fine tune it. You want this car running right. You want the engine to run smooth. This is what you have to do. This is what you do with your money as you make your money. And most people's argument is, oh, I don't have no money yet. You'll never have no money if you take that aspect. And pay yourself first, 10%, always, anytime, always, every time. So if you have $100, pay yourself $10. If you have $1,000, pay yourself $100. If you have $100,000, pay yourself $1,000. The reason is because just tucking away this little bit is always ensuring that you are getting your just due. You're the one who did the work. You should be getting something for your future self. And so this is the monies that we're putting to work. And so you may be saving, for instance, 3% at your job or 6% into your 401k. Well, that remainder you should be doing outside of your employer. You should do up to the match. What that employer says they'll match you. That employer says they'll match you dollar for dollar into your accounts up to 6% of your salary. Then you should be doing 6% because that's going to be that's a way to get more salary. So you get that extra, and that's tax deferred. So you get that additional money. Well, the other 4% that I'm saying you should pay yourself first, we should be doing in an outside investment account. And we get deeper and deeper and deeper into how that's going to work for you. But the thing is, it's part of financial planning involves you setting up the right accounts, saving for the right purposes. No matter where you make the money, how you make the money, we need to put the money to use. We need to take the appropriate levels of risk. We need to take the money that you earn and put it to work to make more in a safe and sound way to ensure that you consistently have money. All right, real estate investment portfolio. You need a real estate investment portfolio in order, and you need to build one. In order to build one, you're going to need various strategies. Types of strategies that I'm going to list right here, the ones for real estate investing. Now, you have to, find yourself someone who's going to train you on the real estate. That would be a wise thing. There are a lot of gurus out there on the internet, and that works if you follow their plan. And they may have various methods that they're training you on. So, you got to find the one that works best for you, the best one that you understand. But I'm just going to tell you ones that I'm assuming here that you someone who don't have a lot of money. You might even be someone who has no money. So this is the type of strategies that a person like you need to embark on. And then you could combat and say, well, that still costs money. It's still, like I said, get with the gurus who will tell you every little thing. If you were my client, I could go over and explain to you how there are ways, but basically what it is it takes a lot of work on your part, but it's ways to do these things with no money. So to build a real estate investment portfolio, to take back the block, to buy back the block, to buy back everything, to do this real life monopoly, I'm going to suggest, this is on the real estate investing side, I'm going to suggest 3 methods for you to use. And those are fix and flip. And what's the other one? I want you to use fix and flip. I want you to use lease option. And then we're going to slash master lease option for larger buildings. Master lease option. This will be for like commercial and multifamily structured buildings. So fix and flip, lease option, master lease option, and tax liens. And I might have mentioned this before, and the reason is because fixing and flipping is a way for you to make some chunks of money, especially if you manage to fix and flip in such a way to flip it to yourself and then you start doing, some of these are going to work in conjunction with this. So this is a method that's kind of just always you doing. You have to always do this because you're going to be fixing and flipping properties back to yourself. So you're going to be flipping it, but you flipping in order for you to, um, because the reason that you're going to be flipping these is you're going the real methods of making money is fixing, flipping, and uh, obviously buy and hold. That's an and hold. So let's put them together as one, because this all works together. So when you fix and flip a property, understand that you're finding a property that is a diamond in the rough. It is a lump of coal right now, but you're gonna squeeze the value out of it and turn it into a diamond. So you're looking for something that is raggedly run down in some sort of way, or yeah, I don't care how it looks, as long as you can get it for the person for less than what it's worth. And because we're going to fix it up, and flipping it means I'm getting it, I'm taking it, I'm selling it back. I'm finna flip this, right? So I'm selling it right out. So I'm trying to get it for less and then sell it in the market for more. Now, I might, when I sell it for more, I might be selling it to myself. Well, what do I mean by that? Well, all right, let's talk about what is it, how do you make money at that period? You make money at fix and flip and buy when I buy it for 100,000, I fix it up for 50,000, I sell it for 200,000, I flipped it for 200,000. So then that means there's 50,000 left. So when I sold it, I kept 50,000. I made $50,000. Well, now that also works for the buy and hold. How so? Because I find a diamond in the rough, I buy it for 100,000. I fix it for 50,000. I sell it. I refinance it to myself for 200,000. But I don't need to take the 50,000 out. That's just mine. I'm holding it. I basically bought it by refinancing it under a 30-year mortgage, 30-year fixed mortgage. Now those payments are going to be low. And so I'm going to hold it, meaning I'm going to just keep it. And the people who are paying the rent are basically going to be paying the mortgage for me plus the cream on the top, which goes in my pocket. So, and over time, as the tenants pay the mortgage down, this goes into your, and this is what I'm saying, the hip hop economics. This is part of the blueprint, part of the marathon, part of you building a legacy, part of you holding the property. That's income. So for 30 years, they're going to buy this property for you. So by you just doing a little groundwork, a little legwork, a little paperwork shuffle, so in 30 years from now, so it'll start benefiting you right away in multiple ways. But 30 years from now, it's all gravy. The property is paid for, and every bit of that is income to you. And that's what the buy and hold strategy is for. That's what buy back the block is all about. That's what you hold, having a legacy is all about. That's what this being in your family forever is all about. That's what you owning no matter what they gentrify. It doesn't matter who moves in. Space aliens can move in, take over this city, but they're gonna be paying you rent because you did this. You fix and flip. You out here fixing and flipping, buying and holding, doing it. And so the reason that you're gonna do both is buy and hold and fix and flip, meaning flip it out, not to yourself, but you just sell it out there in the market, is because you need more money. So let's go down to lease options. Now, a lease option is a circumstance where you find a seller or a potential seller or someone who didn't know they wanted to sell to you, but you're going to convince them to sell to you. But you're going to get favorable terms. And so this works very good under certain circumstances, but obviously you have to have a machine that hunts for the right people for this. When I say machine, I don't mean a physical machine. I mean your processes and your methods, your techniques of sending out mailers and whatnot, and going to the right events and groups, and being on and networking with the right individuals. So here's the scenario. So you're going to you get the terms are on a you're going to lease this property from a person for 3 years. In 3 years, you're going to buy the property at X amount. So let's say the property is worth $100,000 right now. Well, you promised the individual you'll pay them $110,000 in 3 years, and you're going to start leasing it from them right now. They are not on the hook for this payment no more, and so you're going to pay them $1,000 a month. Let's say that's their mortgage. The numbers just don't hold me to those numbers. $1,000 a month, so you're on the hook for the $1,000. But you in turn lease it out to a tenant, and that tenant is paying $1,500, $1,200. Let's just call it something small. Say $1,200. So you make $200, and so in 3 years you should have fixed this property up in such a way, made the various improvements, even if that meant you're adding on to it, but you're doing something to improve this property such that it's going to be worth more than $110,000 in 3 years. In fact, you want it to be worth 30% more than $110,000. Where do I get that number 30% from? Because if a bank is going to loan you, if they're going to finance an investment property for you, they may only finance 70% loan to value. So based on the value of that property, they will give you a loan of 70% of that value. So then if that's the case, I want 100% financing. So you need to make the value 30% more than that 110, which I need to reimburse this owner for. So that's kind of the shuffle that we're under. If the property doesn't fit those numbers, we don't want it. We want those properties that fit that number. And so out of all of America, just keep searching until you find that type of scenario. Now, a master lease option, you might find more of these, because these are often apartment buildings, apartment complexes, commercial buildings that have multiple tenants. And so you take on the master lease. You're the master leaseholder. And so now all the tenants pay their rents to you. And so they are subleasing from you. So again, in that 3 years time, you should have improved the value of this building such that you could refinance it under a long-term mortgage, even for it's a commercial property. And so under that long-term mortgage, the rents pay for their mortgage plus some. That cushion goes into your pocket. Now, also, we're basically doing fixing and flipping. It's just that we use the lease option as a way to enter into the property, a way to gain control of the property. The lease agreement is what gave us the ability to fix the property, and we flipped it back to ourselves. And even if we fixed it and flipped it to ourselves, it may be for the purpose of selling it at a later date. And so tax liens are a way to get property that is in some way damaged, or in some sort of way that somebody don't want it no more, because there is a tax lien on the property. Now, you need to go deep into it. I can refer you to various gurus on the tax liens, teach you that methods. But basically what it is if the municipality, this mean the city, state, whatever, put a lien on the property because you didn't pay the tax, then somebody is going to buy that lien. And then after a certain number of days go by, they've been sending you mail, you're going to find out that this person who bought that lien actually owns your property now. And then you can say, oh no, please, here's the bread, you can give me my property back. And maybe they'll give it back to you, or you got a certain There's certain laws, you get a certain amount of time, but after a certain amount of time, he's just out of luck. And so this is the new owner of the property. You got it for pennies on the dollar. And so I'm saying use that method because you could just bid on properties all over the place. So and wherever you get a property, then back to point number one, you fix and flip it. If the property is, it was undesirable in the first place, so it's gonna need fixing, or it might even be flat ground, just straight land. Then you're gonna have to build and flip. And the same thing, it doesn't matter. It's this all about the numbers. Whatever the numbers say you do to it is what you do. All right. And so those are the methods to build your real estate investment portfolio. And of course, there are other methods, but some of those methods I would include in the stock market investing, and then some on further that would be fall under entrepreneurship strictly, But let's get to that point in entrepreneurship. You're going to need some level of entrepreneurship on the hip hop economics uh, marathon. There's a blueprint that you need to follow here as well. And I'm just going to lay out some things to to think about. First off, I'm saying you should get a product. And I've been trying to, there's a couple products that I'm working on too, but I mean, off the wall stuff, man, anything. So, but what you're going to have to do is research these things, these products, and find out where you can basically just buy them off the shelf and then rebrand them. And often that's going to be in China. So Alibaba. Go to Alibaba.com. It's an Asian type of a Google, and so what they have is access to a lot of the products you could get overseas in Asia, and a lot of the trinkets, a lot of the junk, the stuff you don't hardly think about. Get it from over there and have your brand put on it, and find some distributors out here and put it in there. It could be even shoes. Shoes, glasses, all kinds of things. Selfie sticks. You know, faucets. You can have your own brand of faucets. You can have literally anything, whatever your key interest area is. Dig into there and see how you can insert yourself. Find a product that is a component of your industry that you could put to use. But fundamentally, um, I feel we should have products out here in the physical landscape in stores that can be picked up, physically grabbed. But also, we need to enter and tackle and win this .com game. Um, let's follow what Zuckerberg and Steve Jobs and all of them been laying down for us. Been watching it happen, and I'm right here in Oakland, California. This is, not the heart of Silicon Valley, but we here, we in it, we next door. We seeing it happen. They pushing. Silicon Valley is not just in the San Jose; it's up here. They shoving us, making our rents go up higher and stuff. So, you know. But I'm saying we need our foot in that game too. And fundamentally, the .com world is a matter of every service that is out here being provided, you can provide it as well online. And so what I really want you to do is don't worry about stealing somebody's idea. Steal everybody's idea. Everything that's already out here being done, don't want you to do it, but I want you to put your brand on it. And you're going to take it to the next level. And you're going to steal their market share because you do it better than them. I don't care what you in. If you in, I want you to take your brand, take your product, take your service onto the internet and utilize internet services for your business, because there are services that will allow your business to be big time, to be bigger than it is. If you're a real estate salesperson, a real estate investor, if you're it doesn't matter the service. There's a way for you to expand your hustle to the internet, for you to take over the internet, for you to grab your slice of the market to where you will be a major success, not just a little, a major. And I didn't do too much writing up here, but that's cool. I was just practicing on that to see how that go. But what I'm trying to convey to you is that it's your turn to get out here and follow this hip hop economics blueprint. Follow the wave. The landscape is right now changing to progress from destruction, from even in rap that destroy ourselves, sipping on scissor and all of that is about done. That's for the fools. Let the ignorant fools, go to the wayside. Which one you gonna be? You gonna step up to the manhood and real womanhood. This is grown folks finance. This is hip hop economics. We talking about progress here. This is the blueprint. This is the marathon. We talking about do it. So into it, but to do it. Thanks for listening. It was just drop us a little bit of science for you. Thanks for listening. Holler back at me. Like.